my friends? Paul here, AW4U, the Real Estate Group, with, of course,
Scott Decente.
And Scott, we got a live audience with us here today. So if you hear people laughing in the background, this is not a laugh track. This is real.
It's real. It's live.
We've got some awesome team members in the audience today, working while we do our thing here.
I've never been more nervous.
I know. We're a little bit on the spot here. And to start off our episode, we got to talk about, we put our beloved AW4U national headquarters up for sale.
DMs are flooded.
DMs are flooded,
People
actually.
Wondering what's going on. Is AW4U folding? Are we going out of business? What's happening here?
You know what? I'm just done. I'm going back. I'm applying at the bridge there, taking your old job, and I'm done. I'm just over it. No, off to bigger and better things. A lot of moving parts here. Can't share too much about where we're going, but it is going to be bigger. It is going to be better. And super excited about that.
Yeah, absolutely. We've gotten actually quite a bit of activity even on this building in just a couple of days. So it's a great building, great location. What more could you ask for?
We've dialed it in here, fully renovated, brand new HVAC a couple of years ago, 2 3-ton units on the top, and new roof, and did a whole reno when we purchased it in 2018, and absolutely obsessed with this building. It's been good to us. But it's time to leave. And as sad and as much as that breaks my heart, I'm over it already.
Well, what's that old quote? A shark can only grow to the size of its environment or its fish tank, right? So I just feel like it's time for us to expand the fish tank and maybe get some growth along with it.
Scottradamus right there. Scottradamus. There's that laugh track. Awesome. So excited to. I mean, when I saw the building go live and I looked at the pictures, obviously Anthony crushed the pictures on that again. It all became real. But we do have a spot secured to where we're going. We're not going to be homeless out there, and hopefully it all works out. I'm hoping for the best, and life has a funny way of when you manifest and you put things out there, it just tends to happen.
Paul Stradamus.
Paul Stradamus. So if you know anybody looking for an awesome about 2,000 square foot building in Old Riverside that's fully renovated and is leaving behind amazing memories and vibes, reach out. We'd be more than happy to show it to you. All right, so we're standing up. We're standing on business. You know what that means? Must mean that we got some stats to go over. So going over some stats here. It's been, how are we feeling about the market right now?
Yeah, I mean, it's still hit and miss, I would say. I would say that we're building inventory slowly, which happens around this time of year and likely all the way into fall. So I've got some properties that are selling really quickly, and I've got some properties that are taking that 28, 29 days to really figure out where we stand in terms of price.
Yep.
But, the great properties, the properly marketed properties with some good negotiating, I find are still selling. I don't know if it's just me, but, yeah, what about yourself? Just subjectively, of course.
I agree with that 100%. Inventory is rising. Sales are rising as well. We always like to remind people of days on market. We'll go over that. That's actually trending down, which kind of makes sense to me. But it doesn't. Not everything sells in 7 days. Sometimes you have to exercise some patience and follow the strategy that you've implemented for your sellers. So, getting to them right away. So, we're just gonna go residential right now. So, residential sales. I'm gonna start in January. January we had 276 sales, super low. February that rose to 355. March 440, and April we had 487 residential sales. So that's a steady climb, essentially since December. 487 brings us back to about last July, which is interesting. But I do feel like that's going to be a number that's going to just not skyrocket, but it's gonna rise just the way it has been, and a little bit more steady. Until, of course, if we see the old interest rates, something happen there, it's a whole new ballgame.
100%. Yeah, I mean, a little bit of the steam has been taken out of the market with everybody's anticipating rate cuts as early as even last month. They never came, and it seems to be getting pushed back further and further with each meeting, each new inflation report. So that kind of hopium is fading away, which is just kind of leaving us in this kind of no man's land. Stable, solid market, but price is not really rising too quickly or dropping. So I would just call it stable.
Now, of the 487 sales in April of 2024, 269 of those were under 550, and 218 of those were over 550. So we're seeing the 6, 7, 8, 9 million 1112 mark really start to move a little bit more right now.
Yeah, I agree. The new construction stuff might be a little bit slower, but there's really good value in the resale. I don't know if you're kind of seeing the same, but I think a lot of people are, when they get the price they want for their older home, then they take that and they invest it into something newer, bigger, and trade up. So that lower end market really does fuel the higher end market, and a ton of buyers looking in that sub 550 range. I mean, it's a sweet spot. You got people moving here from the GTA all over the country to take advantage of the pricing, and that's providing some stability there in the lower priced properties.
My favorite stat by far is next to the number of units that have sold, which is, maybe my top 3. But my favorite stat to follow is the average sale price, not only annually, but monthly as well. And again, we're seeing a steady incline there. So let's start with the average monthly sale price. In January, let me just blow this up here. In January, 534. February, 576. Remember, we had that huge increase there. We had a lot of high-end properties sell that month for whatever reason. Dropped to 563, now to 581. So if we take January at 534, now we're at 581. These stats are all mirroring each other. Average sale price annually, 534, 557, 562, 568. When you zoom it out on the annual basis, it's, again, that steady rise. And that's a healthy market, right? Everybody asks me, how's the market doing? And my response right now is, you know what? It feels healthy. It feels healthy. It doesn't feel like a buyer's market. It doesn't feel like a seller's market. It just feels pretty healthy.
Yeah, I couldn't put it any better. Now, the question is, where do we see this going as we head into the summer, fall, and then, of course, winter? Do you have any predictions there? Assuming we don't get rate cuts. Let's start with that assumption.
I think it's going to be par for the course. I think it's going to be a steady increase, and it's going to be just a little small gains at the same time. And again, I don't want to see an average sale price go from 568 to 605. Let's go 568. Let's mix in a little 578, 900. Whatever it is. I want to see it a little bit steady like that, because this is a very enjoyable market to work in right now, and buyers have options, and sellers, if they're prepped right, priced correctly, marketed well, and have a great negotiator on their side, as we know, they're having success as well.
Yeah, I couldn't agree more. Now, I was wondering if we were going to mirror the fall and winter of 2023 if we don't get rate cuts, where we actually see seasonality play out and start to see those prices dip, because we had a pretty big dip summer, fall of last year. So that's kind of where I was seeing things happen this year again. People stop kind of buying when school starts and winter comes and people aren't really out in the market, and you have that inventory that needs to sell. Not as many buyers out there, might see a price dip. Now, that's all off the table, like Paul said, if we do get even a quarter point rate cut, sentiment changes and all that stuff. So we'll see how it plays out, and we'll continue to update you every month.
And I do think you're going to see that seasonality. And at the end of the day, I do think it'll all average out to still some steady increases on the average sale price. I think we'll see units drop, but on the average sale price, I don't think we're going to see too much of a drop on that, especially if I zoom out for the year. I think it's just going to go nice and steady. The months may fluctuate, but the year should be a steady little red line going up.
Yeah, that I agree with. Yeah.
Now, one more. So annual sales to list ratio, we're at 48%. That means is 48% of the houses that come to market do indeed sell. Residential listings. So going back to speak, when you feel like inventory is gaining some steam out there, there's some options out there. Residential listings in January, 722, 737 in February, 929 in March, 1,222 in April. So
that's a big jump.
What you're feeling is what's happening. What you're feeling is what's happening. Okay? And then all these other average days on market, again, interesting here. January, 36. Okay, January started off really slow. February, average days on market, 30. March, average days on market, 29. April average days on market 27. So we're seeing the sales go up and the average days on market go down, and that kind of makes sense. Condominium sales real quick. We had 79 units sell on the market in April. March was a very healthy month with 83, 59 and 58 January, February respectfully. So the condominium market still strong as well right now. So there's your market update for April. Now, keeping on standing on our business here, we got some as important as market stats are. We got to talk about this new capital gains that got passed with the budget, or however it got passed. All I know is that I texted you right after. My blood was boiling, and then you calmed me down by one small text, and all you said was, "Guess I'm not selling." So that was it. That was an interesting remark.
Yeah, that's
to
a good
that,
point.
Right?
That's a good
that was
point,
an interesting remark to that. So,
Yeah.
Can you break this down? Let's just try and keep it as easy and as simple as possible. Personal name, corporate name. Break it down.
Yeah, for sure. So the capital gains inclusion rate has increased from 50% to 66.25% or some odd number there. And basically what that means, let's say you had a $100,000 capital gain. Typically, prior to this new rate, you'd be taxed at 50% of that, which is $50,000. Now it's going to be 2/3, so 66%. So obviously, if you do some math here, this could end up being tens of thousands of dollars. If some people have hundreds of thousands of dollars in capital gains. Now, if you're an individual and you don't have a capital gain that exceeds $250,000, the 50% remains the same. If you exceed $250,000, everything after that $250 becomes 66%, unless you're a corporation, and then all capital gains are taxed at 66%. So, tons of anger out there. This came out of left field for a lot of people that have been holding on to assets and not selling them for various reasons. And like you said, Paul, I always recommend don't sell your assets anyway. So when I saw this, I immediately thought to myself, well, even more reason not to sell. There are ways to access that capital without selling, home equity lines of credit and other opportunities like that. So I'm just not going to sell my investment properties. But
well, put yourself in the position of mom and dad up in Muskoka bequeath you a little vacation property. Fantastic. At that time it was $200,000. It's worth 1.2 now. You're getting slaughtered with this new law.
Yeah, tens of thousands.
It's absolutely ridiculous. And my personal opinion is that people in life are making great decisions for their families, great decisions for themselves. They're taking all the risk with their own money. They're sacrificing things that they do throughout their days and their lives, and you're getting taken again. As if 50% wasn't enough for making an amazing decision, and everybody was just kind of good with it. Now we're at 66%. I'm fired up, Scotty. I'm fired up about this. It's just
there's a lot of spin-off consequences too, right? It's going to mitigate people wanting to invest in Canada. There's already talks of that. Some corporations are thinking again about operating here. You've got the carbon tax on top of that. All these things are really limiting people's desire to invest here. So there's a lot of spin-off effects as well. And it's the old Robin Hood syndrome, right? Take from the rich and productive and give to the poor. And we know the government likes to squander money. So
this hurts the daily investor, the person who has come here with nothing or has built something and has sacrificed and put their money into real estate because it would be a great driver for their family to create some wealth, and they're coming for the principal residence, I'm telling you. And the second that happens, we're all just going to pay it and keep moving, and that's not right, man.
Yeah, no, I have had a handful of calls this week from some sellers that are going to try to get ahead of this capital gains announcement and sell prior to that. So got a couple upcoming listings, corporate owned properties. Like I said, you might be looking at tens of thousands of dollars of savings if you sell and beat that date there. So we might see a little bit of a flood here in the next few months as people digest this. But otherwise, what can you do?
Well, let me run this hypothetical situation by you, if you don't mind. I know you'd have to pay title, land transfer tax, and all that stuff. You think people are going to start flipping these into their personal names?
In some situations.
Actually, that's technically a sale, though, right?
Yeah, that would maybe trigger the capital gain.
Damn it.
Maybe there's some ways to sneak that through, but not that I know of.
Yeah.
But good thinking, though.
Yeah, thank you.
Very good thinking.
And then as it started coming out, I was like, well, no, then that's a sell.
Now, in the future, though, you might consider purchasing in your personal name rather than a corporate name, right? So
there's no doubt about it.
Yeah, definitely some things to think about there.
Everything in Trisha's name from now on. 100%. Nothing in the corp. Nothing. We're done. Okay, so any questions on that capital gains breakdown? What's your advice to these phone calls that you're getting right now?
Yeah, if you're thinking about selling, if there's other reasons as well, like, one of my clients has a student rental, it's become a bit of a headache, so that this is pushing him over the edge.
Yeah.
But in general, my advice would remain the same. Just if you don't need to sell, find a way to access that capital, put a HELOC on it, use that money for other investment opportunities, and just don't sell. That would be my general advice.
And that is tax-free when you refi.
100%.
Yeah.
Yeah. It actually becomes a tax write-off.
And of course, there is interest on that, but it's in the long run, it'll save you money, and you still get to be the benefit of the equity that you're building in the proproperty. Mm-hmm. Okay, any questions on that? Let us know. Lasalle Landings, I think we want to touch on.
Yeah, it's kind of
LA.
Yeah, it's kind of an under known. Like, even we came into the office here, I mentioned Lasalle Landings, and nobody knew what I was talking about. So it's kind of flying under the radar for some reason, but it's a big waterfront development right in LaSalle, stretching from Laurier to Bouffard. So multi-million-dollar. It's a massive development. And they've got some really cool stuff. They've got an event center, a festival event lawn, a water feature, and ice trail. So you'll be able to skate around a trail during the winter. Ice skate.
That's perfect for you.
Super cool. Yep, no doubt. Community center, mixed use.
Triple sow cow.
A mixed use development with some commercial, retail, restaurants, a natural preserve zone, a leisure and sports zone, and a few other things as well. So I really love stuff like this for real estate values. LaSalle is already one of the top 6 places to live in the country. Super low crime rates, some of the best schools, beautiful natural scenery, quick access to Detroit with the Gordie Howe Bridge as well. Yep. And now you add this. I mean, LaSalle is really one of the best places to live and invest in Canada.
Yeah, team that up with the Vollmer Center that's already out there.
Yep,
and LaSalle is always been a hot market. LaSalle is such an interesting market because it's a lot of old mixed with new. I mean, one of the last sales there was, I think it was 3.1 on the golf course there. It's a big sale, right? Especially for our area. And then you have introductory homes in there as well, where you can get into the market over there in the high 4s, I'd probably say. May not be the nicest, but you can dump your money in there. It's safe money in LaSalle, and this just adds to the desirability of the area.
Yeah, couldn't agree more.
Now, development talks. Speaking of, that's a development not on the real estate side, but on the real estate side, a lot of stuff going on out there.
Yeah, right? A lot of units coming up right now. Chris Toldo was just telling me that council approved at the last meeting over 930 units, just at one meeting. So that's condos, etc. And so we saw, I don't know if you saw some reports, but GTA right now is actually experiencing rent decreases over the past couple months. So rents are going down. And the reason for that is you just have excess supply. So I don't think Windsor's there now, but if we keep, these are all going to be, a lot of these are going to be rental units, by the way, right?
Yep.
And the reason for that is because that's where the incentives are. These giant towers are going to be apartments. So we got a lot of chaos.
The audience right now is spilling everything. Yeah. So that's pretty funny, though. I like that.
Yeah, that is.
So, and again, with all these incentives, I feel like, these people are smart. They know what's coming. The incentives teamed up with, we got to assume money's going to be getting cheaper. Are we getting ahead of the curve right now? It just feels like we're a couple years away from wow. This is unbelievable stuff here.
I mean, we've built, I don't know, there's 10, 15 new towers over the past, let's call it 24 months. And there's already 5 or 6 more included in just this report. The Komodo land, some stuff in East Riverside as well. 50 plus unit apartment towers. So we are going to see a changing landscape. The federal government is bypassing the provinces and going directly to municipalities like Windsor or wherever and saying, hey, if you meet these criteria, we're going to give you X amount of money as incentives. So the province is no longer standing in the way of all this upzoning and everything else that's going on.
That's huge. That's a great step.
Residents are no longer really having a voice. So you might see some anger and some frustration, But we are in a housing crisis, and it's happening. And there are ways to take advantage of it and make money off this. Not too often you get to partner with the government in Canada, especially as a smaller investor. But there are, that's where the incentives are. MLI Select, financing for 5+ rental units, the creation of, that's where the incentives are. So that's where the developers are going. And if it wasn't for these incentives, I'm telling you right now, these would not be being built
100%.
Because you wouldn't be able to build these as condos and sell them for a profit, because you'd have to sell them for $500K plus.
Yep.
And the market's just not there right now.
Won't support it right now for sure.
Yeah.
We haven't seen any. I mean, we had a bunch of condos. I think we talked about this a couple months ago that wrapped up. Those are 2-year builds though, right? We haven't seen any new condos launch yet, go to sales and all that stuff in a little bit of time. Once that happens, should be interesting. I want to see the timing on that though. I want to see when these condo developments come back to market where they're selling them and they're waitlisted and all of that stuff. And once that gets there, then that'll be a slow roll. You'll see maybe 25% of a building, and then it'll start to rise there. But there has to be frustration in the resale market first before new construction will take off, whether new construction, residential or condo, and we're just not there yet.
Yeah, I think we need a rate cut or two for that. And I think what the federal government's doing right now is saying, hey, we need to build as many rentals as possible because the housing's going to remain unaffordable. It's unaffordable now. If they cut rates, prices are going to go up. It's going to remain unaffordable. So they need a place for people to go without rents jumping 20% a year. So they're building out this rental supply so that they can accommodate a rate cut. That's my personal opinion. Then when the rate cut comes, affordability comes back, frustration appears in the resale market, and then you turn to the resale condominiums. But right now it is apartments being built and rental units pretty much only.
Now, Scott, last business to take care of here. We've got a bowling competition that we're in tomorrow. How you feeling about that?
Not good. Yeah.
Good?
I mean, I was hoodwinked by Katrina, who told me that she was a great bowler, and I asked her what her average score is. She said under 100.
Oof.
So I said,
Cat. Wow.
I said, well, because I picked her for my team.
Yeah,
now
sure.
I'm no better, I must admit, but I thought maybe she could carry the team. So we'll see how it plays out. We got some bowlers in here though, and I'm not one of them.
I am a team captain, and I've taken on the talents of Dan Marar and Anthony Nassar, and we'll see where
Also
it takes
known
us.
as D'Anthony?
Yeah, D'Anthony, and we've been practicing about 4 or 5 hours a day right now. So we're gutters are up. We got rid of the gutters last night at our session there. And we'll see what happens on Thursday. It's a big day. It's a 3-frame match. Total score is what takes it, and there will be a trophy. So look forward to some content on that. And I'm a competitor. I will be giving it my all. If I throw one ball into the gutter, I won't be able to sleep all night. It will happen though. It will.
Now,
happen.
if anybody in the audience wants to come watch, where is this
Where we
taking
at?
place?
Super Bowl.
Super Bowl. Yep.
Super Bowl Thursday.
Get your tickets.
2 to 5. This doesn't come out till Friday, so we will not see you there. But we thank you for your time. And again, if you found any of this information valuable or educational, then me and Scott have done our job today once again. Thank you.